think I'll keep an eye on the weight room just in case extra people come in there. But I just want to say thank you to everyone who's joining us for today's workshop on GST and HST requirements. We have very familiar faces around the table, which is nice to see. If you haven't met me, my name's Amanda. I'm the communications coordinator with Queen's Partnerships and Innovation. We also have Rick on here as well. He's the assistant director of programs and operations with QPI. And one of our mandates is to support excuse me, local tech-based entrepreneurs and startups in Eastern Ontario in the innovation ecosystem with support from Invest Ottawa's Scale Up platform. We also work closely with several partners in the ecosystem. So Garrett is on the call with Launch Lab. So that's an example of one of our partners. And we just want to make sure that folks are, getting help from, the right folks at the right time. Um, Also, thank you to Andrew for kindly offering this workshop for us this morning. Andrew from Seguin Financial, based in Cornwall. Is that correct, Andrew?
You
You're
got it,
still
Amanda.
still
Yep.
based there? Yep.
You got it.
And they offer bookkeeping, payroll, taxes, consulting services. But I will hand the virtual mic over to Andrew, and perhaps you can provide a bit of a broader introduction on your expertise. And I hope everyone who joins us learns something helpful today.
Perfect. Thanks, Amanda. Yeah, so uh always excited to be here. Always loving doing webinars and workshops like this. Anytime I can provide some insight, educate either entrepreneurs, partners about stuff like this. I'm always super grateful. And I always try to make sure there's at least one like eureka moment for anybody here. So like I didn't know that. That's good to know for next time. And I always do make it very impactful. And I also do like to answer questions. So if you have a question that you're like, I really want to know this, and I don't really know 100% the answer. I've heard two different things. I've heard an answer from my neighbor Joe. I've heard an answer from my brother or whoever. I'm always happy to answer any questions you come up with. So please, if you want to put the question in the chat, if you want to unmute yourself, have at it. I'm happy to answer, whether it's during the slide I'm talking in or at the end, whatever works for you. I'm cool with it. So yeah, a bit of a broader introduction of who I am. So as Amanda mentioned, my name is Andrew Seguin. I am the founder of my own firm. We are 8 years now operating, and we are a team of 15 full-time staff officially as of this week. So I hired somebody else. We're all in Canada. They're all full-time. And we essentially are a fully paperless and cloud-based bookkeeping and tax firm. So we are the primary finance team for businesses and entities. So we are often the one who is doing A to Z. So we're doing everything from data entry to accounts payable to payroll to sales tax to year-end prep and monthly reporting, and the list goes on and on. And we use a lot of technology to leverage what's on the market. So whether it's OCR receipt management, whether it's accounts payable automation, whether it's AI, we're trying to leverage as much as we can to make it as seamless and easy as possible for our clients to provide us answers to our questions. And I've been doing webinars and workshops almost from the first year. I got over my fear of public speaking and by doing stuff like this. So I thought, I got to keep that momentum going. Not only that, as I mentioned, I have a lot of knowledge in these areas, and I find this is it's an area for a lot of business owners who often don't know exactly everything or much regarding finance. So I think it's always impactful if I can provide a little bit of insight. So this is a beefy one today. So we're talking about HST. We're going to talk about the differences between different supplies. So whether you could be a taxable business, an exempt business, or a zero-rated business, your requirements, whether you need to register, how to register, a more complicated term called place of supply, which is really, really important if you are ever selling a service or product outside of your provincial base. So if you are an Ontario business and you're selling to a business in British Columbia or Quebec, whether it's widgets or a service, it's really, really important to understand what your requirements are. We're talking about, because we are primarily in Ontario, we're going to talk about other sales tax that exists in Canada, things like provincial sales tax or Quebec sales tax. I'm going to provide you with some tips and tricks on how to file and conquer an HST return and a bit more advanced tricks as well. So yeah, it's a pretty beefy one today. And a quick disclaimer is that every business is a little unique, right? So it's pretty high level. But if you have a very specific question regarding your business or a client of yours, please ask and I'm happy to answer. I do recommend if you don't have one to have a tax accountant or a bookkeeper or a tax preparer, somebody in your corner, essentially, that you can like lean on in situations you're unsure about because it'll always happen. Uh, you could always use ChatGPT and Google, but sometimes they give you answers that are not always correct. So I would just say be mindful of that. But it's a good starting point. I would say if you're, want to do some more research on your end, ChatGPT could be, for instance, helpful in regards to that. But I would still recommend to have somebody in your corner. All right. So HST essentially it's our provincial and it's our federal sales tax in Ontario, but it's a harmonized system. Okay, so it was combined in July 2020. In the past, it was two different sales tax you would see, like a 5 and 8%, but now it's harmonized. So you typically only see the one flat percentage of 13%. Um, and essentially what it is a sales tax that your business will collect on behalf of the government. So you're essentially managing this requirement on behalf of the Canada Revenue Agency, the federal government. So you are legally required to sort of protect and manage this, and you're the sort of middleman actually between the government and your customer. You are collecting on behalf of them essentially. And you are required to have an HST number if your taxable sales are $30,000 in a 12-month period. Now, it's really important to understand is that it's not net income. So people often get this confused and saying, well, I didn't make $30,000. And my first question always is, well, how do you define make? Profit or like top line revenue? Top line revenue is your factor here. Okay. So if you generate $30,000 of sales, and this number has been in place for a long time, there's been a lot of discussion about increasing this figure for inflationary purposes. $30,000 a year, 15 years ago is very different now. That could be somewhere around like $60,000, $50,000, right? Nothing's changed here. I doubt the government's going to budge on this because that's a substantial amount of revenue, tax revenue that they would lose out on. So at the end of the day, though, it's 30,000 of revenue that could trigger your HST legal requirement. So if it's not based, if you have $20,000 of expenses and $40,000 of revenue, you had $40,000 of sales that, would potentially trigger you to need to register. Okay. At the end of the day, they really look at it as a 4-quarter threshold, but I always just say it's 12 months. But it's also it's important that you're always looking back 12 months. So it doesn't just reset. It's not like January 2026 hit and said, it's all good. I'm going to reset back to zero and start my threshold calculation as a reset. No, you actually need to continue looking back. I would say again, the last 12 months. So there are situations where, if you did $20,000 of sales in December because you're a seasonal business, uh, and then you did like 3,000 in January, 4,000 in February, and 5,000 in March. At that point, you've hit the $30,000 threshold. You don't reset back to zero once January hits. Okay. Now, it does depend, which I'll dive deeper on this, of which tax rate. So it's not always 13%, but it does depend on what you are selling and where you are selling to. But we'll dive through that in a little bit. Um, so, but HST how it works is really you're collecting HST, but you're also paying out HST. And it ends up being the difference between the two, right? So what ends up happening is you will collect HST on your traditional transactions, your sales, and so on, but you also pay HST on your expenses. And the difference between the two is what you typically will owe back the government. So if you collected $10,000 of HST, you paid out 2,000, you don't owe the government 10, you owe them 8. The difference between the two is what you'll end up owing. And that's why good bookkeeping practices make a lot of sense because you need to track what you've collected and you need to track what you paid out. And without good bookkeeping records, you'll have no idea and you'll be spitballing a number that can be not only costly for you, but time consuming in a future audit. But it's very common for startups, right? We work a lot of startups and they will often potentially have a refund because you didn't collect anything. You didn't have any sales, like you didn't charge your services to anybody, but you paid out a lot of HST. You had subcontractors, you have office equipment, you had office supplies, you had subscriptions, rent, perhaps, the list goes on. So what's up happening is all that HST that you paid in the year will actually be refunded back to you. And it's always nice getting money back from the government. So I'd say, a lot of entities, a lot of startups will often have refunds. We have some clients that are very massive. They're like 7, 8, 9 million a year in revenue, and they still get refunds from the government, depending on their business, which we'll talk about as well. But this figure, this HST, goes on an HST return. And I'll show you an example later on. But you either have to file this return on a monthly basis, quarterly basis, or on an annual basis. So how do you get one? There's three major ways. You can do it online, you can call, or you can fax. Yes, faxing is still an option with them on this. It does take about 5 minutes online and it is free. There are some services out there that will say, like, we can get you an HST number in 24 hours for $60. You don't have to pay ever to get an HST number. You're legally allowed to get one for free. You don't have to pay for it. You could use a service if you just want the convenience of going through a third-party provider. Um, I do like calling by phone sometimes because if you talk to a person, they might, especially for somebody who doesn't really know much about this, they might guide you perhaps in the better direction. But it's a coin flip. You might get an agent that will just give you bad information. And you can't always rely on that information, which is super scary. Uh, Whether you register by phone or by online, you will need some pieces of information like your SIN, your address. They might even ask for some information on your last tax return just for verification purposes. So be ready to have some information at your disposal when you need to register. Okay. So this is really, really important. Okay. So you do get to choose. As a new business, you get to choose whether you're monthly, quarterly, or yearly. I like yearly, especially for more administrative purposes. Okay. So, and the reason why is because when we do taxes for our clients, so whether you're a sole proprietor, whether you're incorporated, um, when we're doing bookkeeping, we inherently track your HST. You can't do one without the other, okay? So we know exactly what you collected and we know what you paid out in HST. So often when we're doing your tax return, we can also do your HST return. So and your corporate or personal tax return happens once a year. So doing your HST once a year also makes sense, right? There's fewer touch points that we have to do in a file. So yearly makes sense because we can do your bookkeeping once a year, personal tax or corporate tax once a year, and we can do your HST return once a year. Now, the problem that I find that businesses run into is that they're not properly managing their expectations on what they will owe in HST. Because 80% of our clients will owe HST, right? you typically will collect more than you pay out. And they're not managing of what they've actually collected of what they paid out. So all of a sudden, you have this tax bill of, $3,000 or $7,000, and you have an HST bill of $6,000. And they're like, oh shit, I wasn't ready for this. I wasn't prepared for this. And that is the one downfall about annual bookkeeping is that you're sort of playing behind the curve. You don't really know what's going to happen until it's done. I do recommend if you have a bookkeeper, an accountant, or you are personally strong in the administrative part of your business, quarterly can also make a bit more sense. The problem for us is that every time we have to be involved in a file, it costs dollars, it costs fees. So doing it once per year makes a lot of sense, but doing it 4 times per year, our rate will be at least 50% greater. Even though the bookkeeping as a whole is the same, to be involved, to do our books, to ask the questions, it's much easier for efficiency purposes to do it once per year than do it 4 times per year. So it really depends on your business and what you're comfortable with. I do recommend, so a lot of our clients, we do put them quarterly if we're involved. Clients that we want to kind of keep their fees down, we put them to once a year. But don't be late. So the problem with quarterly is that if you're like, I don't have time, it's like, no, you really need to be on time because it's a 5% flat fee penalty and then 1% every month. And that's just the late filing fee. Then there's interest fees that do fluctuate. I think right now it's maybe like 6% per year. But you're essentially getting interest and penalties. If you're like 3 to 6 months late, that $3,000 HST bill could now be $3,500. It really, really escalates and compounds very quickly. So just be super mindful that if you're like, I just don't have time or it stresses me out, then I think I would recommend to go once a year. Quarterly, if you're like on the ball, you have a calendar reminder, you have a system to do your bookkeeping, then I would say great. But being late can be very costly. Um, it's not the tax bill for clients who are behind like 3 years. It's not the tax bill that kills them. It's the penalties and interest that will kill them. So, and you can't even write that off as a tax deduction. So penalties and interest through the government is not tax deductible, which kind of sucks. So you're essentially paying this out of pocket and you can't do anything with it. So just be mindful of that.
Andrew, quick
Yeah.
question.
Uh-huh.
Um, do you have slides that you might be able to provide for the workshop today?
Yeah. Am I not showing a slide right now?
No, we just
Oh
need
my gosh, really?
you.
I'm sorry, guys.
No
That's
worries.
actually wow. Okay, you're right. I wasn't sharing. It's showing a little dot around my screen, but I'm so sorry, guys. Here. Can we see that now?
We can.
Look at that. Okay, I'm just gonna quickly show. That way you can kind of see. So this was the workshop overview here. I'm sorry, guys. That's so funny. I think it's the first time I've done like 100 of these. I don't think ever. Uh. I've ever seen myself not do that. So this was the little percentage split and when it started. And this was the $30,000 requirement. So all you saw was my ugly face for the last 20 minutes. Oh man, I feel bad for you guys. So yeah, and then this way, like if people want to rewatch this, they can and take a little pause here. Um, Refunds for startups, how to get one online, call or fax. Takes a few minutes. So I wasn't that super far. Like I'm pretty much about here. Penalties here. And here we are. So right here. Uh Thanks, Amanda. I appreciate letting me know. So you can file monthly, quarterly, or annual, as I mentioned, but the problem with monthly or quarterly is that you have 1 month to get it done. Not a lot of time. So for instance, you're a monthly filer, your January return is due February 28th. And trust me, that time flies by. You're like, holy crap, I got to do my HST return. And what happens is you start getting stressed out about it, right? And you start digging yourself a hole and you're like, I'm not going to do it this month. And you don't do it next month. You don't do it next month. And you're like, well, what's the point? And you start spiraling. You start getting stressed out about it. That happens so often, which is why I say like annual can make sense for you, right? It can absolutely make sense for a lot of businesses. So if you're monthly or quarterly, you only have 1 month. So your Q1 return, uh, your quarterly return for Q1, you have until April 30th. So again, 3 months of bookkeeping, you have 1 month to do, or 1 month of bookkeeping doing every single month due by the next future month. So just be mindful of that, okay? Um, Whereas annual clients, you have a bit more room to breathe. So annual clients, you have until June 15th to file if you're a sole proprietor, or April 30th for payment purposes. So there's a difference between when you have to file and when you have to pay, which is kind of tricky. You might be saying, how do I know how much to pay if I don't actually work on the return? The government essentially allows you to like make an installment or a prepayment on a best guess judgment. So you have to pay by April 30th and you have to file by June 15th. I essentially say file by April 30th. At the end of the day, if you can, it makes a lot more sense because no one wants to have two different deadlines in their mind, right? So make it easy, April 30th. As a corporation or a partnership, you have 3 months after your fiscal year end. So corporations can have a different fiscal year end than like December. So if you have an August year end, for instance, you have until November 30th to file this. So it's 3 months. So 3 months is a lot more time, obviously, than 1 month. So I do recommend, again, annual HST returns can make a lot of sense. So be mindful of the fiscal year end that your business might have if you are incorporated. So installments is also very important. So as I mentioned, if you don't file, you owe penalties and then you have interest accumulating on said balance. But the government actually wants their money earlier if you're an annual filer. So being an annual filer doesn't completely make you avoid not having to pay the government ahead of time. So you still have to make a quarterly installment if you ever owe more than $3,000 in a given year. Okay. And it's specific to you and your reporting period. Um, and Again, being late, they will charge you interest. Now, it's not 10% right now. It was, I believe, 9 or 10% in the peak of interest rates. But I think it's between 6 to 7%. But essentially what happens, do I have an example? No, okay. But so an example, if you owe $6,000 in your 2025 return, they don't want to wait a whole nother year for your 2026 return to get $6,000. They want you to prepay ahead of time. And it'll be something like uh paying, you got to pay them in April, you got to pay them in July, you got to pay them in October, you got to pay them in January before your 2026 return. But just all you need to remember is $3,000. $3,000 is your threshold of installments. That's your threshold for installments for corporate tax bills, HST amounts, personal tax, doesn't matter. If you owe $3,000 in any of those categories, the government doesn't want to wait a whole year to get paid. They want you to pay a bit up front. So by the time you file your return, you've already paid them. That's essentially how it works. Um, Now, it's not a perfect system because your prior year could be very different than the current year. That's fine as long as you don't underpay. So, like if you owed $6,000 last year and you owe $2,000 this year, as long as you pay $2,000, you're fine. You don't have to pay $6,000 if your business has changed. But you can only figure that out if you're doing bookkeeping, right? You can't know that number off the top of your head unless you have books in place. So let's talk about, and any questions so far, please. And again, any questions, ask away. Happy to answer anything here. So we're going to get, as we're sort of trickling into the session here, we're going to get into more intermediate topics, more advanced topics. This one's really, really important and can feel a bit complicated at first. There are three types of businesses with different supplies. And when I say supply, it's the government term of whether you're a taxable supply business, an exempt supply, or a zero rated supply. And some goods or services are not subject to HST. So you don't actually collect HST. And that's if you're a zero rated or an exempt business. Other goods and services actually tax at 5% GST and not the full 13% HST. Um, and I'm going to give you some examples here. But at the end of the day, just be aware that your business, depending on what you're selling, doesn't always have to be collecting HST. So you have to figure out what you're selling, what service specifically, but more so what good you're selling, and then go through that process of, do I need to collect HST? Okay, so some examples where 5% actually gets triggered, if you notice, is like children's clothing, books. So if you ever buy a book, you'll notice that it says 5% GST. You buy children's clothing, it's 5%. It's not the full 13. Qualifying food and beverages. This is it's a unique one, but it's very relevant for Canadians. If you buy a coffee at Tim Hortons for like $2, you'll get charged 5% GST. But if you buy three coffees at Tim Hortons, you'll get charged 13%. And the reason why is there's like a threshold. I think it's $4.99 or it's $3.99. I don't, it's one of those two numbers. But if you buy uh, certain types of food and beverages over that amount, you'll get charged the full 13%. What I've seen people do in the past, it's probably still done. If they have like a Tim Hortons order they want to make, they'll do separate split orders so that they only get charged the 5% GST on those orders instead of the 13%. And it's kind of weird in the sense what it's a weird like loophole, but it does work. You don't have to you can do that. But instead of it does add up, right? If you had five coffees at $2 each, so you're paying $1.30 in HST, whereas instead of paying 13%, you're paying 5%, you saved 80 cents. Doesn't sound like a lot, but that happens every day. You're actually saving something like, let's see, you're saving every day 80 cents, $4 a week, $200 a year. It's like, oh wow, that's actually like pretty decent by just splitting up your order. It is time consuming, but $200 is still $200. But you could do stuff like that. But if you ever look at your receipt, you'll notice that sometimes you're just being charged 5%. So zero rate is unique. So zero rate is unique in the sense that you don't collect HST, but you can actually claim, it's called the input tax credits, ITCs. It's really the HST that you paid out. So if you are considered a zero rated business, you don't collect HST, you register for an HST number. But all the HST that you pay out, you can get it back as a refund. So at the end of the day, what I recommend, if you are a business that sells zero rated services or goods, you should register for an HST number because that's dollars you could be getting back as a refund that wouldn't be available if you didn't register. So I always recommend if you're a zero rated business, you absolutely should register for an HST number. So some examples are this. Most common ones I see that we work with. One is your business selling services outside of Canada. So if you're a consultant and you're primarily working with businesses in the United States or Europe, you don't charge them HST. Your revenue is calculated in the $30,000 threshold. So you might be required or would be required to register an HST number without knowing. You're like, well, I don't need to collect HST. They're not in Canada. Doesn't matter. You're actually still legally required to register for an HST number, but you're a zero rated business. So you actually don't charge HST to those businesses outside of Canada, but all the HST that you're going to be paying in Canada, which you will be, can be claimed. Another common one we see is basic groceries. So if you're a grocery store or you're selling produce, selling meat, they're zero rated businesses. So farmers will be a zero rated business quite often, which means they don't collect HST, but they can pay all the HST that they pay out, they can get it back as a refund. So those are more common examples of a zero rated business. Then there's businesses called exempt supply businesses. So this is the only difference is that you don't collect HST, but the HST that you pay out, you can't get back as a refund. So this one sucks. This is the worst of them all. in the sense that you don't collect HST, but when you inherently pay out HST, you can't get it back as a refund. So it becomes an expense in your bookkeeping. So it becomes a tax deduction, but you can't get the amount back as a refund as you normally would. Um, so you don't register for an HST number and you don't track the HST. So bookkeeping is easier. It's way, way easier to do bookkeeping, like 3 times easier, I would say, to do exempt supply businesses bookkeeping than it would be for a business that sells and buys in Canada and US. It's like it's way different. So some common examples here that I'll call out. I would say one of them is so long-term rentals, right? So if you ever rent a space for more than a month, it's exempt. So landlords, quite often, when they're renting to tenants, residential tenants, it's considered long-term. So you don't register for an HST, um, and you don't collect HST. But commercial, right? Commercial is considered a non-exempt supply. So that's a taxable supply. So you will collect HST on your commercial tenants. Another common one here that we often see is medical and dental services. So if you ever get an eye exam, for instance, you'll notice that you don't get charged HST, or you go to the dental office, you don't get charged HST. So they're actually considered exempt businesses. But if you actually go back, uh, there's medical devices that are zero rated. So like buying glasses, for instance, is zero rated. So you don't collect HST, but you can track the HST that you pay out in that business to get some money back. That's hard to do. What we typically do is we determine what percentage of your business is zero rated. So if you sell 20% of your revenue is selling glasses, 20% of your business is zero rated, we claim 20% of all the HST that you pay out. That's the way we do it. The government's totally fine with that because it's really hard to say this expense belongs to this type of this revenue line. It's almost impossible to do that. You have a telephone bill. It's like, how do you split that up, right? It's literally impossible. So, but you have some businesses that actually can be considered both. So, like optometrist is a big common one we see, which you're a zero-rated business because you sell glasses, for instance. But you're also an exempt business because you sell services. You're selling eye care, eye exams, and so on. So, this is the common. There's obviously a few more, but this is the most common ones we will see um, from businesses. Then there's your traditional taxable supply business. So that I would say 80%, 85% of our clients fall into this threshold, right? Which is $30,000, you collect, you pay out. So pretty straightforward stuff. Okay. Um, Straightforward as in like if you're not one of those two, which a lot of businesses are not, you're just a taxable supply business. And that $30,000 figure is very, very important for you. I've had clients that didn't know they need to register for HST and they're doing like $60,000, $70,000 a year of sales. Uh, that can be very costly because the government would ask you to backdate the amount that you should have collected in HST, and they will want you to pay that. Now, depending on what you're doing, you could maybe go back to your customers and say, hey, listen, I should have charged HST on my services. I didn't. My bad. Can I invoice you for that amount? That is acceptable because what happens is your customer is not paying for a service; they're just paying for HST, and they can claim that as a refund on their HST return. But it depends; it can be very tricky. You need a good relationship with your customer, and it depends on how much you're talking about and how many years, because there is like timelines of how far you can go back. Long story short, this is why I recommend, like for instance, if we see a client that says, "Here's my tax return, here's my business," and then we see $50,000 of revenue, they don't have an HST number, there's potential alarm bells going off, right? We'll just ask them, "Hey, do you have an HST number?" And if not, why? And they'll say, "Well, I didn't know I needed one because I never made more than $30,000." And it's like, now we got to educate, right? 30,000 is actually based off revenue, not based off profit. So here's a common question, okay, which is, listen, I don't think I'll ever make more than $30,000 a year in revenue. And so it might take me 5 years. Should I register still? My answer is often yes, if you're just primarily working with other business to business clients, okay? Because they don't care often if they pay HST, right? It's a natural course of business because they get it back as a refund. They will pay out the HST and they'll use it to reduce what they've collected. So they don't really care too much, right? So if you sell a service for $1,000 plus HST, they don't really care about that HST. They're really focusing on the $1,000. However, if your primary consumer is, like say B2C, so you're not dealing with other businesses, you're just dealing with direct consumers, they won't just see $1,000. They'll see $1,130 is what they're paying out of pocket. That's their figure in their mind of what they're really paying for your service. Um, and you could have a competitive edge. Again, we're talking about micro businesses here, right? Like you can't live off of a $30,000 a year revenue figure if that's your only source of income. It's less than minimum wage. But if this is like a side hustle or like you're just starting up, right? Uh, you don't need to register. So like if for instance, you're just selling like little crafts, right? You're selling some crafts at the markets every weekend, you're making $20,000 a year. If you're selling a craft for 20 bucks, well, what happens if you get an HST number, you're really selling it for $22.60 because the end consumer, they can't do anything with that HST. They just have to pay for it. Because HST is really a end consumer tax, right? It's a consumption tax. At the end of the day, the consumer, the end consumer will pay this HST when it's all said and done. HST will get in and out, transferred between, multiple businesses, multiple logistic chains. But the end consumer, right? I want to buy a car, I want to buy a computer, I want to buy this craft. You will personally pay that HST when it's all said and done. It's a consumption tax. So if you don't have to charge 13% to your consumers, you will have a competitive edge to the other market beside you, the other booth beside you who's selling for $20 plus HST. Your end cost is $20, where theirs is $22.60. Now, what I do caution you is that what you don't want to do is say, this year I won't, but next year I will. I'll wait. I just say get it done with now. Get used to and familiar with collecting HST and tracking it. Because what happens is if you don't, now you have a price increase, a quote unquote price increase. Your clients are now not paying 20 bucks anymore, they're paying 22.60. And then if you want to do a price increase, they're like, oh my God, you keep raising your prices. But you haven't. You're just raising it once because now you have to start collecting HST. Um, so my honest opinion is that if you're just working with other businesses, just get an HST number from day one. It's also more professional because if I like get a lawn care business to do my maintenance at my building and they don't charge me HST, they're telling me that they don't produce more than $30,000 a year in revenue. Do I want a business that is very small on that nature to cover the lawn care and snow removal of my business? Probably not. Do they have insurance? Right? $30,000 a year. It's like they're under that figure. 'Cause that's what they're telling me. Right? If they're not charging me HST, they're just essentially telling me I don't have $30,000 of revenue I made. So I'm like, well, how legit is this business? Right? There's like alarm bells going off. Not everyone's going to have those alarm bells, but I do. It doesn't discount their service too much, but there are warning signs perhaps that could be there. So I typically recommend if you're a business to business entity, get an HST number. If you're just going to have this as a side hustle and you're just selling widgets or services to the end consumer, you could delay it if you want. That's not a problem. All right. Place of supply. Any questions so far? You can have an answer now. Okay. So this is a bit complex, but it's really, really important to understand. Okay, so we work on what's called a place of supply process. Essentially, what it is that if you're a business selling to a customer in a different province, In most cases, you will collect and charge sales tax based on the province of where your customer is located. Okay. So, for instance, if you're an Ontario business and you have a customer in Quebec and you're shipping goods to them or selling a service to them, you would only charge them 5% GST. That's it. And the reason why is because they work on a provincial sales tax system called Quebec sales tax, and that's 9.975%. So it's a two-line tax you'll see. Every province in Canada has a 5% federal tax, and then each province might have be a harmonized system, GST only, and I'll show you a little chart. But Quebec has their own provincial tax at 9.975%. And because you don't have a QST number, you don't charge them a tax that you're not registered for. And you also don't charge them 13% because they don't work on the harmonized system. So you essentially need to say, where is my customer located? If you ever are buying something online, often it'll be through Stripe or through Shopify. You won't inherently know it's Shop or Stripe, but you'll probably see the same format of a purchase of a website. You ever notice that taxes are just blank until you put your province in, right? It won't tell you what your final order, like your shipping fee or your tax amount will be until you put your province. And it's because of this. It won't know how much to charge you in taxes until it recognizes where province you're located in. So if you're buying something online, right, you'll sometimes it might get charged 5%, you'll get charged 13%, but it obviously depends on where you're buying and where you're buying from. But it doesn't know what to charge you until you tell the system what province you're located. So this is true if you're a business selling services or products to somebody else. Shopify is good at turning on the auto tax calculation. But if you also are not careful, it will, if you say, oh, yeah, I'm going to sell in Quebec, I'm going to sell in British Columbia, it will collect sales tax in those provinces on your behalf without you knowing it. And clients come to us, right? And I'm like, hey, you've been collecting Quebec sales tax for the last year. You've collected $1,000. Were you aware of that? They're like, no. I'm like, are you registered? They're like, no, I'm not registered. It's because Shopify doesn't care, right? You just have to turn on, yeah, I'm gonna collect Quebec sales tax. Yeah, I'm gonna collect British Columbia because I'm gonna sell my product across Canada. And it's automated. You don't really know about it. Um, but what ends up happening is now you have this tax that you collected that you weren't supposed to collect. So it's pretty messy. Um, so if you operate a business out of Ontario and you sell a taxable supply, you charge sales tax based on where that client originates. So Kirk asked, would small suppliers be exempt from this complexity because they wouldn't be charging taxes in any province? Sounds, yeah, not a dumb question. So you're correct. So the term is a small supplier, which is any business that is considered under $30,000 of revenue. As a small supplier, you don't need to legally register and you don't need to legally be mindful of your requirements to collect and pay out HST. Like you will pay out HST, you can't avoid it. You can't be like, well, I don't have an HST number. I don't want to pay this. No, you have to pay it because you're the end consumer, probably in that situation, or they just have to legally charge you. Um, but you don't need to be charging any taxes anywhere as long as you're under $30,000 of revenue in a 12-month period. And if you go over by $1, technically, depending on the calculation, you could be required to register. Now you can deregister. You might say, hey, listen, I was pretty busy this year, next 3 years, I'm gonna slow it down. I'm gonna, do it part-time. You could close your HST number. That's totally fine. Um, but they do matching audits, which is you filed your personal taxes, you're showing $60,000 of revenue, but you don't have an HST number. They might say, are you supposed to put, like they might send a letter and say, are you supposed to have an HST number? Because we noticed that you don't have one. Then you can tell them, oh, I'm actually selling this supply or I'm selling this service. Because there actually is a way to show that, like what percentage of revenue is what type of service or supply, and that can often trigger a review or an audit, or not trigger a review or an audit because you're selling a service that is considered exempt, um, and your revenue is over $30,000. Sometimes providing more information is helpful, but you won't need to charge and collect sales tax if you're under $30,000. Yeah. What you can't do is open up multiple businesses to avoid that $30,000 figure. So someone came to us saying like, I have two different businesses, so I don't have an HST number because they're both under 30. There's a tax term called associated businesses, which is businesses that you own, where there's multiple corporations or multiple sole proprietors. All associated businesses get combined for revenue purposes to determine thresholds. So if you have a lawn care business and a snow removal business and they both do 20,000, your revenue is 40,000 for calculation purposes. It's not 20 and 20, it's 40. So you would need to register for HST for both of them, essentially. Um, so yeah, good question. Not a dumb question. Any question is a good question. It's you're thinking about it. Either someone's here thinking about it, someone's going to watch a YouTube video and think about it and saying, I'm glad somebody asked that because I didn't know. Um, so another example, British Columbia, right? So they have a federal and a provincial sales tax system as well, a GST PST system. So again, every province is 5%, but they work on a 7% provincial system. So since I don't have a PST number in British Columbia, I would only charge them 5%. And what happens if you accidentally charge them 13%, they'll probably say, hey, you're not supposed to charge us 13%. And that's happened, right? You might feel embarrassed and you might be like, well, what do you mean? Like, I don't know. Like, that's why, again, you have a tax accountant, you ask ChatGPT, it'll probably help guide you in the right direction. Um, but they will come back to you and say, oh, we're not supposed to pay HST. We're like, and they might not tell you what you're supposed to charge, but they'll definitely say what they're not supposed to get charged. Um, Another curveball is like the Maritimes out east, they also work on a harmonized system, but they have different percentages than 13%. So, for instance, New Brunswick has 15%. So you would charge them 15% because they are also on a harmonized system. And as I mentioned, if you sell online, be very careful about making sure the platform is not automatically charging those sales tax when you don't want them to. Because last time I checked, it's a matter of like bloop, bloop, you just like checking these things off, like you're just toggling them on because you're not inherently thinking, well, I'm not registered. Maybe Shopify's changed this because they had a lot of issues in the past with customer service. I would hope like making the onboarding process like, do you have a sales tax number in British Columbia? If you say no, then it won't, no, it won't give you the option to turn it on initially. Maybe, I hope so. I don't know though. But here's like a little handy chart that you can I'll send this slide deck to Amanda. You can take a screenshot here. But this is like your source of truth. It's sort of like your Bible in regards to recognizing. I put in yellow, which is if you're an Ontario business, that's what you have to be mindful of. And you can kind of see it's pretty complicated. It's not super straightforward, right? Some provinces, essentially the north, and Alberta runs on a 5% only system. Then you have four different provinces, Saskatchewan, Quebec, Manitoba, and British Columbia, that run on a provincial sales tax system. Then there's some harmonized provinces, AK1, runs on a 14% system. Then there's three other ones that run on a 15% system. And then we're the only one with a 13% system. So it's actually not super straightforward. And you have to recognize this of what to charge and when to charge, because if you don't, you'll get emails back from your customers and it can make you look a little bit sloppy. And because, if you're making mistakes continuously, because you're just inherently thinking, I got to charge 13%, I got to charge 13%. There are systems like QuickBooks Online that can automatically enable a tax rate to a customer. So you can say, this customer is a BC, I only ever want to charge them 5%. It'll default to 5%. So you don't have to remember these things. As opposed to creating an invoice through Excel or through PDFs, like you might not inherently remember these things. So I would always recommend for you to give yourself a little chart like this to remember. If you ever traveled to Quebec, or another province that runs on these PST systems, you will pay their provincial sales tax. You can't avoid it. You can't say, well, actually, I'm from Ontario. Can you just charge me 5% or 13? No. So like if you ever go to IKEA or Costco in Quebec, for instance, you will pay their 9.975%. And you cannot use it to offset what you've collected in an HST. It's a different system. So if you pay $100 in Quebec sales tax, you cannot use $100 to reduce what you've collected in HST. The government will disallow it, and you could be flagged if they're noticing that you are trying to claim this a lot because you just didn't know. Your business will more than likely be flagged for the next year or two. They'll do an audit. If they catch it on audit, you'll be flagged because they want to make sure that you're not doing it again. Because what happens is you're essentially taking money from the Canada Revenue Agency, right? Because Quebec and Canada CRA works differently. It's like they work with each other federally, but Quebec has their own provincial system. But Quebec is essentially taking money from you, and you're taking money from the federal government. That's not how that works. So be mindful of this because you're paying an extra 10% that is not refundable back to you one to one. So my typical rule is that unless you're going to save more than 10% to buy something in Quebec than buying in Ontario, buy in Ontario because you can at least claim the whole HST. Okay. And whatever you do pay in Quebec sales tax will get rolled up into your expense for like bookkeeping and tax purposes. So you can still claim it as a deduction, but getting $100 back as sales tax is $100 in your pocket. Paying for something for $100, your tax rate might only be 20%. So you're only getting $20 back as a refund. So $100 refund versus 20, big difference. So you typically always want to make sure you're paying HST as opposed to paying Quebec sales tax. Okay. And if you ever get charged, so if you're buying something from Quebec online, you should be only charged 5 or 13%. If they ever charge you Quebec sales tax, ask them about it. Doesn't matter if they're located in Quebec. If you have a consultant you're working with, okay, and they're charging you $1,000 a month, they should not be charging you Quebec sales tax because you're located in Ontario. They have to follow place of supply rules the same way that you follow those rules. So typically, unless you're physically going to Quebec, you should never have to pay Quebec sales tax, for instance. If you are, it's an error on their end. They make errors too, just the same way that we all make errors. So we talked about this. Yeah. You know, try to shop in the same province, in my honest opinion. That way, every single input tax credit, which is HST that you pay out, you get to claim. So there's a few key pieces of information that you need when it comes to filing a return. You need your total sales, what you collected in HST, and what you paid in HST. And then you need to report any installments if you're an annual filer. Okay. Those figures come together to an amount owing or a refund amount. And it looks like this. Okay. It's a lot of extra lines, but the only lines that you will use 99% of the time, line 101, line 105, line 108, and if you're an annual filer and you had to make installments, line 110. So those are the numbers you're putting in manually. Okay. Yeah, no problem, Garrett. Good to see you. Um, so this is what a return looks like. They all look similar. Depends on if you're a monthly filer, a quarterly filer, an annual filer, but they're all similar in that. I've gone ahead, if you don't want a full accounting system, which I do recommend depending on your business, I've gone ahead and built a Google Sheet that you can, actually, I think it's an Excel template that you can put your phone to it to download it. I will get the link and I'll put it into the chat at the end too. You can just download your own version. There's a video in this spreadsheet that will teach you how to use it. It's not that complicated, but it'll actually track your income, track your expenses, track your HST of what you collected and what you paid out, and will even help you show you what the HST return will look like. So if you are ever working or you are a small business and you don't want a full accounting system because it's too complicated and whatnot, this is a really good system to use. A lot of our clients love it. I built it because I wanted to help out our clients with stuff that can be often complicated. And, you know, sometimes when you are in an accounting system you have no experience in, it could be a shit show. It could be more complicated than just like putting into a spreadsheet. Spreadsheets only go so far, right? That's the problem with it. So the more complicated your business is, I would recommend to use something like QuickBooks Online. We use QuickBooks Online for all of our ongoing clients, and it's a good system. Um, so I'll make sure you can put your phone to this little QR code. I'll also put the URL into the chat right after the slide deck here. So here's some like more advanced tips and tricks that is really important that not everyone knows about. So meals and entertainment. So if you are taking a client out for a meal, or you buying coffee for your team, buying tickets to the hockey game for you and your client, whatever. Um, yeah, yeah, no problem, Rick. Um, you can only claim 50% of the HST of the meals and entertainment. Uh, if you do miss one, oh shit, I forgot to claim this. You can claim it 3 years in the future. But the government doesn't want you just to amend the return, just to change it. They want you just to claim it in the next return. So if you're like, oh crap, there's a massive $2,000 HST amount on my vehicle that I bought that I forgot. I didn't know I was going to claim it. Okay. You don't fix and change your prior return. You put this number into the next return. The government will actually disallow it. They'll actually say, no, we're not going to allow this change, but we're going to want you to put it to the next return. This is really important. Your line 101, your sales, needs to closely match your actual final tax return. So we have some clients when they, file their own HST return or they file their own taxes, and um, it becomes an issue because they'll report $100,000 of sales on their personal tax return, but they'll only show $70,000 of sales in their HST return. So the government's like, one's wrong, right? They'll know that. And they'll provide a letter and say, which one, like, hey, you only showed $70,000 of sales in your HST return. We think you owe us HST on $30,000. Now you can respond back to it and say, I'm so sorry. I made a mistake. My line 101 actually needs to be this number, but I didn't collect HST on it because I work with US customers. Then that might ask for additional questions like, can you please provide invoices for the year, right? Because you made a mistake and they're not going to just always assume that your answer is right. Because then now thinking, well, you made this mistake. Are there other mistakes that maybe you're not aware about? And maybe they say, oh, actually, your customers are in Quebec, right? Like, so be mindful that there is a matching component that the government does with your revenues against your HST returns. If you pay insurance, you'll notice that they charge you a special 8% tax. It's called a retail sales tax. You cannot claim it as an input tax credit. So you cannot claim it on your HST return. Kind of sucks. It's the only one that exists. So if you have vehicle insurance, business insurance, if you have group benefits insurance, it doesn't matter. You will pay this 8%, but you cannot claim it as an input tax credit. So it becomes an expense. Not sure why. It's just been like that for a very long time. It's kind of stupid, to be completely honest. Why is it all the HST and sales tax you can pay and claim, but this one for some reason you can't? Sucks. As I mentioned, some businesses are actually both exempt and zero rated. And the way we break that down is we split their input tax credits based on a percentage of their revenue. So if we know this business is 40% zero rated and this business is 60% exempt, we'll track all HST and we'll claim 40% of all the HST as a true input tax credit, and we'll put the other 60% back into an expense. Obviously depends on what business, but I'd say health services are in this area quite often. So like If you're, again, optometrist, that's one for sure. Dental clinics could be another one because like I think like things like whitening perhaps has HST on it. So it depends on again what you're selling. Um, Airbnbs are actually considered a taxable supply because it's a short-term rental. As I mentioned, you're exempt if it's long-term, but Airbnb is often considered short-term rentals. It's, a few days, under a week. So in that case, you are perhaps required to collect HST. Quick summary. If you're going to be serious about your business, I recommend registering sooner rather than later. And you always have to remember where is your customer located, which province, because you might charge 5%, 13%, 14%, 15%. Now, there are thresholds. I didn't mention this, but if you do sell a lot in Quebec or British Columbia, you could maybe be required to register in those provinces. That is a possibility. So just be aware of that. So, like, I have some clients that have a Quebec number, HST number, British Columbia number, Saskatchewan number, and we have to file returns in those provinces. So it depends on what you're selling, how much you're selling as well. You might need to register in those provinces. So just be aware of that. And this is really, really important. It's not your money. So like the money that you're collecting, you're holding in trusts. So what clients often run into as an issue is that they are not prepared. They didn't do any work in the year. They have no idea what they collected. They see dollars in their bank account and they're spending it. Then it's time to do your sales tax return. It's time to do your tax return. You owe $12,000 total between everything. You have $3,000 in your bank account. The chance of success for that client to move forward is very, very little, right? Because now they're $9,000 in the hole all of a sudden. Do you think that client is going to have $9,000 put away somewhere to pay their tax bill and their HST? No. So they're in a hole now. And they're getting mad. They're getting mad at being an entrepreneur. They're getting mad about like this is not fair. But the HST, like you just got more money that you weren't normally going to get, right? You collected this money on behalf of the government. You charge the customer 13%. If you didn't have an HST number, you wouldn't charge this money. You wouldn't have the money to begin with. But they're not seeing that way, right? Sometimes initially. So there's a lot of education, but it's not your money. And that's really, really, really important. So yeah, thank you so much for having me. For any other questions, happy to answer. I will put that URL in the chat. And thank you everyone so much for being here. And if you're listening from YouTube, feel free to send an email, ask Amanda, whatever it is, and be happy to help out.
Awesome. Thank you so much, Andrew. I really appreciate you going through all of that. It's a lot of information to take in, so I'm sure even people might go back and rewatch it and revisit some of those slides. So really appreciate you taking the time today. And yeah, I hope everybody who joined us learned something that they can take away and t tell your friends. We'd love to have Andrew back for other workshops and hopefully we can arrange a couple more in the future.